So the U.S. Federal Reserve has decided to keep its key interest rates steady despite intense pressure from President Donald Trump to cut rates. For more on this, we're joined today by Professor Shim Myungkyu, Associate Professor of Economics at Yonsei University. Professor Shim, thanks for joining us this morning.
Thank you for having me.
So the Fed announced this morning that it will hold its interest rates steady, saying the economic activity in the United States has been expanding at a solid pace. What's your take on this?
Yeah, as was expected before the meeting, the Fed kept its target interest rate at the current level, as you just mentioned. Most importantly, there still is a pressure on the U.S. inflation rate, and it was 2.7% in December, which is lower than expected, but it is still above 2%, which is the target of the Fed on the long-run inflation rate. One might argue that it is not that high compared to what we observed in 2022 or 23, but the importing firms' capability to keep the price level not too high seems to be at the limit. In the recent interview, the CEO of Amazon argued that many firms cannot sustain such a strategy so that high tariff will be passed through to the consumer prices very soon. Because the price stability is the most important objective of the Fed, it was somewhat expected decision. And also, given the threat of the US government on the Fed's independence, I guess lowering the interest rate, which is consistently required by the US president, was not an option in the current meeting.
Right, and Trump wants to lower rates, but analysts say Fed rate cut could be months away. And some expect that the bank is likely to lower rates only once or twice in 2026, even under Trump's next pick for Fed chair amid improved economy and labor market expectations. What are your thoughts on the Fed's direction for the rest of the year?
Yeah, I also agree with the usual analysis, and that's based on my comment that I made before. The most important task of the central bank is that it should keep the low inflation rate. While economic growth is also important for the Fed, it is not of the first importance to the central bank. Given that there are so many potential factors, including the pass-through of tariff on consumer prices and the seemingly never-ending tariff war that can push up the price level of the US, I believe the Fed will not be able to lower its target rate very soon or very easily. Also, there is a midterm election in November, and keeping low inflation rate seems to be also important for the current US government to win the election. Lastly, as is well known in economics, there is a lagged effect of the interest rate policy on the inflation rate, and so the Fed will not be able to lower the key rate while there are pressures on the price level. I expect the Fed will take a wait and see strategy, which means that it waits until it can obtain more clear signals about the U.S. economy to make a further move.
I see. And turning to U.S. impact on the Korean economy, the Trump administration warned this week that it will raise auto and reciprocal tariffs from 15 to 25%. How might this affect Korean businesses, especially car makers?
Let me first point out that nobody is sure whether such a threat will be really materialized or not. If 20% tariff rate would be really imposed, it will definitely hurt the Korean car makers because that makes the Korean car makers lose their price competitiveness in the US. And according to Kia, its operating profit declined by about 30% from a year ago in 2025 because of the tariff. If the tariff rate remains high, it will clearly hurt the Korean car makers, even they try their best to improve the quality of their cars because it takes time to improve the profitability from more R&D. But the US president again changed his stance just one day after his announcement on the tariff on cars from South Korea. And it makes us believe that 10% point increase in the tariff rate might not really materialize. Also, the Supreme Court of the US might ban the US government to use the tariff rate as a policy tool. So there is still a lot of uncertainty about the tariff and also the trade. So it might be too premature to conclude that the recent news on the tariff on cars would be a real harm to Korean business or not.
Right, and with those uncertainties and amid doubts about Trump's policy making, the US dollar is saying to a 4-year low this week. Can we expect the Korean won to strengthen as a result?
Yes, that is kind of the good news that the value of Korean won was a little bit restored for the last several days. However, it seems to be a little bit premature to conclude that the Korean won really becomes strong again or not. About a month ago, we had a similar experience that the value of Korean won suddenly increased, but it did not last that long. So we need to wait more to see if the changes in the trend of the exchange rate is really prolonged or not, so that it reflects the fundamental of the Korean economy, or it is just a random shock that makes people to say that Korean won is really now okay. My expectation is that the trend of low valued Korean won would be somewhat continued over time unless there is a fundamental change in the exchange market. Most importantly, uncertainty about the trade policy, as we just discussed before, does not seem to be fully resolved as we experience this week. I, together with my colleague, showed in our research that regardless of the uncertainty surrounding the Korean economy, Korean won loses its value when the uncertainty level increases. And given that we see a lot of uncertainties surrounding the Korean economy, I'm not so sure if the Korean won really restores its value very soon or not.
I see. I guess we'll have to see how that goes. All right, Professor Shim, thank you so much for your insight this morning. We appreciate it.
Thank you.